Today's webinar is titled How to Price Your Products and Services. Pricing is one of the biggest decisions you will make in your business. Yes, is one of the least understood. In today's section, we'll be exploring practical strategies to help you price your product and service with confidence, remain competitive, and build a more profitable business. And by the end of this webinar, you should walk away knowing how to price your product without guessing, how to make sure your prices actually cover your costs and give you profits, and some of the common pricing mistakes that quietly kills businesses. And to take us through today's session, it's my pleasure to introduce our speaker, Madam Zulfah Isimekhai, founder of Business Affairs. She's an economist and chartered accountant with over 10 years of experience working with business across different industries, helping founders build more structured, financially sustainable business. And without taking much of our time, I'll hand over to Madam Zulfah to take us through it. Over to you, ma'am.
Thank you so much, Habeebat, and good afternoon once again, everyone. Thank you so much for joining us. So without wasting much of our time, we'll jump right into it. And I'll begin by sharing my screen. So kindly let me know when you can see my screen. You can give us a reaction or just acknowledge in the chat box. Please let me know if you can see my screen. Awesome, awesome, great, thank you. So we'll just proceed. So as rightly said, today's webinar session is how to price your products and services. In as much as we think pricing is a simple thing, it's actually a very tricky thing, because over the years, we've seen it become problems for founders and business owners. Hence, the necessity to have this session. So we say most founders are guessing when they set their prices. This is data, this is statistics, and it's also from working with many founders over the years that we've actually come to know that they just do top of the head, let's set our price at this, or because this person is selling this at this price, let's set our price like this. It's actually more than that, and we can do much better. So before we jump right in, what's pricing? Pricing has to do with setting the amount you want to offer for your product or your service. So we say most founders are guessing on a daily basis, and we want to say, what are the real costs of guessing? So we just put a few here, and we said, it doesn't feel like a mistake in the moment. It feels like you're being generous, staying competitive, or you're just maintaining your peace. But months down the line, it could be 1 year down the line, it becomes a problem to you because you start wondering, what's going on? Why am I stuck? Why am I not making progress? It can be so many things, but from experience, most often than not, it comes back to how much are you offering your product? How much are you offering your service? So one of the things that get to show up as you progress is, oh, you're now booked. You're fully booked. But at the end of the day, you have no clarity. You don't know where your money went. So you are wondering, I was fully booked. I sold at this, I sold at that. But why am I not seeing anything? And your revenue looks fine, but your margin doesn't. Founders, business owners are focused on revenue. Yes, revenue is good. revenue is good to so many people, even to investors. They want to see what your revenue is like. But at the end of the day, it boils down to much more than your revenue. So your revenue looks fine, but your margin doesn't. Your top line grows, but the number you actually keep at the end of the day does not. You are exhausted instead of your business actually making profits. So your business is surviving on, as we say, vibes. It's just surviving on your energy and not on its own pricing structure that you've put in place. And over the years, you've got to see that fewer than 1 in 3 companies, businesses review their prices every quarter. Once they set their price, that's it. But it's not static. A lot of dynamics come into play month to month. So we say what we're covering today, we should know what your true cost of what your item is. We should actually know how to set price to an extent. And then the common mistakes that quietly cost you money. These mistakes may not be visible, but they are there. And then we look at when do you raise your prices and then this pricing strategy. So before we proceed, I would just want us to hold these thoughts that later on in the webinar, I want one of us to volunteer based on what we are pricing currently. It can be your product, it could be your service, just one of your prices. Let's do a live walkthrough on us checking if your price is actually fair enough, both for your customer and for you as a business. So we'll proceed. Now, it's very important to know the true cost of what you sell. Most times, we may just know surface level cost and not actually the true cost of what we sell. There are so many things that come into play when trying to account for your costs. Now, we have direct costs. We have hidden costs, which we also call indirect costs. We have time costs. But most often than not, we see that most founders and business owners are more focused on their direct costs. The indirect costs are left out, and that's where most of the problem and challenges come off. So at the end of the day, everything has to tie together. Your direct cost, your indirect cost, your time cost. You have to put everything together before you set your price so that you'll be able to walk away with significant profits. Like I said, the direct costs, they are the easy parts. That's what most business owners look out for. We're looking at product businesses and service businesses today. So the obvious ones we always see for product businesses are your raw materials, your packaging and shipping, your payment processing fees, your direct production labor. Let's assume we take a business, for example. We take a baking business where you bake cakes, right? You look at your raw materials. Oh, you already calculate. I buy flour, I buy sugar, I buy baking powder, I buy baking soda, and all that. And your packaging, fair enough, you accounted for the cake box. You get to put it in. Most often than not, most business owners do not even account for payment processing fees, but let's assume you've accounted for it. And then you leave out some other hidden costs. Your direct production labor, what did you use to produce at that point in time? But there are some other key factors you leave out. For service businesses, we say, oh, we have software we are using to manage our business. We have internet, platform transaction fees, and all of that. These may be some of the obvious costs that you account for when setting your prices, and then you are leaving out your hidden costs. So we put out some hidden costs here. The cost founders forget to count. Your rework and revisions, your support after delivery, your admin and follow-up time, your own hourly value. How much, what does it cost you to sit down to get that job done? Have you considered that over time, you may do some revisions, you may do some, you may even hop on more sessions with the clients just for clarity, your admin and follow-up time, the emails, the back and forth chasing of say your invoices, your overdue payments, and all that. These costs are some hidden costs that we forget to account for when setting our prices. So once you know your true cost, the next question is, what pricing approach are you using? Is it favorable for your business in the long run? So most people do not really know all these things. They just do top of mind setting of prices. There are so many different types of ways to set prices, and we just put a few here. We have the cost plus method, we have competitor based, we have value based. There are so many other ways you can set your prices. Now, what the cost plus method does is you account for all your costs, and then you decide, I want to put this particular margin on the cost before I set my price. So say the total cost of what you've calculated, assuming you've accounted for all scenarios. We're using the cake business as an example, assuming you've accounted for all scenarios. So to bake one cake, there are different cakes, different cake sizes. So let's say you're doing maybe 10 inches cake. So to bake a 10 inches cake, at the end of the day, you've calculated everything. It will cost you 15,000 naira. And then you now decide, let me just put this margin on it so that I'll be able to sell. So you can decide you're putting a 20% margin, you are putting a 10% margin, you are putting a 25% margin on your cost. So if you say your entire cost is 15,000 naira, and then you want to now set your price. So it means putting 20%, you are selling your cake for 18,000 naira. So your profits from that transaction will be 3,000 naira. So accounting for everything, this 3,000 naira, does this cover your entire business operations? One cake. So when you say, oh, I want to, that's where target pricing also comes in. You say, I want to sell, to be able to make 2 million naira, I need to sell this number of cakes. So that's where most times when I'm setting prices with business owners, I say, sit down, now bring out pen and paper. What is this? What is this? What is this? What is your target? How many cakes do you want to sell? All these things account for what your pricing is going to be at the end of the day, what your margin is going to be at the end of the day, and what your profit is going to be at the end of the day. So we look at competitor-based pricing. This one is common because this is what most businesses do without even doing some due diligence on their own part. You match or you undercut what others charge. You're selling 10-inch cake. You've gone through Instagram handles of like 2 or 3 persons that you like their work and say, this person is selling cake, this particular 10 inches cake for 25,000 naira. I don't want to sell above. I want to beat my competitor. So you either decide to sell at that 25,000 naira, or you may even decide to sell at 23,000 naira, or 24,000 naira, or 23,500. That is where you undercut what others have charged. But before you use your competitor-based prices, there are a lot of due diligence you need to do, and also sit down and factor in your own expenses and know if it actually makes sense for your business. Now, value-based pricing. Value-based pricing is pricing on the outcome you create. What is the perception of your clients? You are offering this, you are selling this. What are you putting in the mind of your target audience to say, this is what you will get if you purchase this product or you purchase this service? Are they getting the perceived value where they are very okay paying whatever price you've put? You know the value you are offering. You know the worth of what you're offering. Your target audience, do they understand your perceived worth? That's where value-based pricing comes in. So what are you creating for them in order to set that price where they are happy paying whatever you've offered to pay? So most times in the long run, value-based pricing actually pays off. In the long run, you've been able to put everything in place, know your target audience, win the trust of your clients, and they're happy because the value they get is actually even more than the offer you have made, is more than the price they are paying for. So they are happy paying it that, oh, thank you so much. In fact, we got great value. That's the idea. Now, without wasting much of our time, we look at the common pricing mistakes. There are a lot of pricing mistakes businesses make. And we say underpricing out of fear. This came as number one because from experience is what most businesses do. Oh, I don't want to scare up the clients. I don't want to chase the clients. I don't even have clients. So what do I do? Anything goes. Anything goes. And then at the end of the day, you find out that you worked and worked and worked and you couldn't even reward yourself. And the business is also not growing. So you're worried a fair price will scare up the clients. So the discount happens even before anyone asks. You're making an offer. Oh, my cake is 20,000 naira. Maybe the client takes a while to respond, or the client is already wanting to say, are you? And then you say, oh, okay, no problem. I'll give you a 20% discount. The profit you put on top, you've wiped it out already, right? That's because there were no strategies in place. You're just scared. Oh, I don't want to lose this client. I want to have this client. And then copying a competitor blindly, just like we mentioned when we're talking about competitor-based pricing. You're matching a number without knowing their costs, their margins, or if their price even works for them. So for example, you have copied a competitor that is selling at 25,000 naira, and you set your own at, say, 23,000 naira. Funny enough, somebody else might look at you and say, I want to even go lower than this person that is 23,000 naira. Unknown to that person that your own 23,000 naira is not even doing the job for you. It's not working for you. So it just becomes a whole cycle of businesses pricing blindly and running round circles, not making profits. Never revisiting old prices. You set a price today, July 30, 2026. July 30, 2027, you've not sat down to review your prices. But the reality is, while in the Nigerian economy, we know what's going on. Every day, one thing or the other is slowly creeping up. Some costs might quietly increase. Some costs might loudly increase, very visible. But you decide to still remain put where you are. Discounting reflexively, we've already mentioned this. Every objection gets met with a lower number instead of a clearer conversation about value. What is the value? Oh, the client is already trying to pose a threat to you to say, it's not like this, so it's like that. But for the client to be discussing with you, it means there's already something the client has seen that has made the client contact you. So how about you stay put and offer them the value, make them see why they actually chose you, because the other persons, they came to you. So make them understand why they chose you before running to give a discount. And where you must give a discount, it means you've accounted for so many things and not just discounting impulsively. And then we have pricing too high. There are many businesses that you see, a lot of people say, oh, your price is too high, your pricing too high. Some persons may just decide on their own without still doing the due diligence that I'm selling this and this is the price. If you don't want to buy, that's it, you move on. But they have other buying options. And when you don't do due diligence, you find out that you even have competitors offering at a lower price, making good profits, and giving so much value. So all these things are very important when setting your prices. Now, how you raise your price matters as much as when. How you raise your price, when you raise your price. Those are two things we're talking about here. A price increase doesn't have to cost you the clients. It's a conversation, not an announcement dropped on an invoice. So you decide to increase your prices, you've sat down, you've done everything, and you decided, oh, price actually has to increase. Good. Now, have you informed your clients? Oh, in 30 days, you can send them an email. In 30 days time, our prices due to this, you explain to the client, and giving them heads up. You can inform them, you can put an auto reminder. You inform them 30 days before the price increase so that they are aware, they understand why you are increasing your prices. You inform them 15 days to, you inform them 3 days to, just so they know that your prices are increasing and it doesn't come up as, oh, surprised. In a situation where they act surprised, you actually have evidence to say, oh yeah, we're actually informing you over time so that you're not caught unawares. And then you lead with value delivered. In order for us to serve you better, to maintain our service delivery without shortchanging anyone, we would like to inform you this. However, it doesn't mean our value will reduce. It will enable us increase our value delivery. Things like that, you inform them properly at the right time, and then you hold the line calmly. There are clients that definitely will not be comfortable with the price increase, and there are clients that understand the value you are offering and are happy with it and even say, yes, we understand you. In fact, it's a general thing. Okay, yeah, so earlier on I said we'll do a live pricing tear down. If we have any volunteer to say, this is my price, I want to understand something. If we don't have, then we could just do a random live pricing tear down. So do we have anyone on the call that want to offer what they are currently charging for, say, a product they are selling or a service they are offering? You can signify by raising up your hand. You can unmute your mic, or if you are more comfortable dropping it in the chat box, you can do that as well. Habeebat, do we have anyone signifying they want to join us in this live pricing tear down?
No, not yet.
Okay. So we can just walk through together. So this particular section of the session is saying, what is it? What does it truly cost? What is it worth to the client? What should it actually be priced at? So maybe we should move on with our cake business example then, since we don't have a volunteer. So we say, what is it? It's a cake, a 10 inches cake, 2 flavors. We have red velvet and vanilla flavors in the 10-inch cake. What are those icings? Butter icing, right? Butter icing. So that's what the product is, a butter iced cake with vanilla and red velvet in the cake. So what does it truly cost? Good. What are your materials? You have your baking flour. We have bakers here. You can correct me if I miss out anything, or if I'm good to go. You have your flour, you have your sugar, you have your baking powder, you have your baking soda, you have your butter, water, you have your baking pan, you have your oven, you have your gas. All these things, you bring them together as your cost to bake one cake. One cake. Good. So we have all these things. We calculate. At the end of the day, we'll find out that to bake a 10 inches cake, you have your vanilla flavor, you have your red velvet coloring, and all that. So to bake one cake, we say it costs us 15,000 naira. That is what your true cost is. At the end of the day, you factored in everything, packaging, marketing, everything has been factored in. And you say, good, I've sat down, I've calculated, and to bake this red velvet butter icing cake is 15,000 naira. That is my cost internally. Now, what is it worth to the client? What are you offering to the client? What makes your own unique? Is your cake very soft, very moist? Is it not overly sweet? Is it tasty? Is it just the right one where people eat it and say, oh, it's melted into my mouth, I love it so much? Those are what is worth to the client, because when the client is eating it, the person wants to be happy eating it and say, I'm happy ordering again, send you an awesome review, thank you so much, exactly what I wanted, or it even surpassed what I had in mind. Things like that, positive review. So when you think of it, you ensure when your output is giving that, okay, it costs 15,000 naira, and you assume based on this is the perception this client has towards this cake, and then you say it's the client will be happy paying 30,000 naira for this cake. Your true cost is 15,000 naira, and you say your client will be happy paying 30,000 naira to purchase this 10 inches cake. And then you now look, oh, this is what I think the client is worth to this person. What should it actually be priced at? And then you sit down, it's 15,000 naira. The way we discussed earlier, you look at your margins. How much margin do you want to put? Do you want to put a 50% margin? Do you want to put a 30% margin? Do you want to put a 40% margin? All these things come in place where you've actually considered your true costs, the worth to the client, and then you now sit down, do your margins. Let's assume we're doing a 50% markup on 15,000 naira that we had said earlier, and we'll say you'll be pricing your cake at 22,500. So you have a profit of 7,500 naira. You may decide you want to go with that 100% markup that you know your client is happy paying. You decide to go set your prices at 30,000 naira. All these things, oh, you've set at 30,000 naira. You can now decide to look at one or two competitors, what's their range, and then you're happy selling at 30,000 naira. When you are selling at that 30,000 naira, before the client buys, you're already putting that perception where the client is even happy purchasing at that price. So this is just like a recap we had said earlier, a pricing strategy for long-term growth. Pricing isn't a one-time decision. It's a system you review as your business changes, your cost shifts, and your value grows. Your business changes, your cost shifts, and your values grows. That's why it's very important to track your cost of operations, your cost of producing, your cost of offering the service. You know your true cost, you choose your pricing model, you review on a schedule, pre-inform your existing clients, and then you can raise your prices. Now, what we covered, what we've looked at so far, how to calculate your true costs, direct, hidden costs, indirect costs, your time. We had mapped out and say your direct cost of production. For some businesses, we can use, we use a product business. We can even use drop shipping, for example. We have people that they just buy items. They buy items and then they sell. They are not producing with their hands. You buy shoes, you buy bags, you buy shirts, you buy clothes, you buy cups, mugs, different things, and you sell. For this one, you did not produce. So what you account for, you're not accounting for your raw materials here. You are accounting for what was the cost to purchase the item. You are selling a shoe. How much did you purchase the shoe? If you purchase the shoe for 10,000 naira, good. How much did you pay for the shoe to be delivered to you? Did you account for that? Good. You need to market. You need to let people know that you are selling shoes, because if you put shoe in your house, nobody knows you are selling shoes. So you need to market. Did you account for that? Good. Now, to be able to market, you have offline marketing and online marketing. Your online marketing, maybe you are using TikTok ads, you are using Facebook ads. Did you account for your ads? The money you are using to advertise for people to know that this is my business, come and purchase. Did you account for all those things? Did you account for the internet you are using in order to even post those ads? to post your products for people to know. All these costs come together to form your total cost of that shoe you are selling. Say at the end of the day, you do your calculations and then you find out that the direct cost, which is purchase of the shoe, is 10,000 naira. Shipping cost is 1,000 naira. Facebook ads, 10,000 naira. TikTok ads, all these things. At the end of the day, when you do a lump sum, you say, oh, it actually costs me a total of 15,000 naira for people to know that I am selling this shoe. This is the cost. Good. Then you now decide what is your margin. What are you adding as your profits? What will you get at the end of the day? You've covered all your expenses. So that's very important. And then we looked at pricing approaches. We looked at common mistakes quietly costing founders, and the top of the mistakes was pricing out of fear. Pricing out of fear. You price out of fear when you have not done your homework, when you have not sat down with a pen and a piece of paper to do your homework on what your actual costs are. So you're scared that, oh, you don't want to lose this person, and then you price out of fear and you discount impulsively. And then we looked at the signals to know when to raise your prices, and then how to raise your prices, the approach, how do you inform those people? Is it a social media post you put out saying due to the current situation of things, it has become mandatory for us to do this. We hope you understand us, and we hope we'll continue to serve you, and all that. So these are the things to take into consideration when setting your prices. At this point, we can pause and say, do we have any questions? Are there any clarity we want to get before we go ahead? We have to summarize this session so that everybody can go back to their activities for the day. Please, if you have a question, you can raise up your hand, unmute your mic and speak, or drop your question in the chat box and we'll respond to you. So is it safe to say we're good so far? We have good understanding of what the session has been about, because I would like you, after the session, of course, we'll share the presentation slides with us. After the session, I would like you to actually sit with your numbers and know if you've been doing a good job or you will need to do some review. Okay, good. So we proceed. Before we round up the session, I would just like to chip in some things about some other strategies we can use when setting our prices. Like I said, instead of rushing to offer a discount, why not put a value? Oh, my item is priced at this, but this is what you will get. This is how it's going to be. These are the add-ons you will get for purchasing my item. These are the add-ons you will get for purchasing my service. Why not consider that? Those are key things to consider. Also, there's bundle pricing. What's bundle pricing? Where you can bundle your inventory. Say you are selling shawarma, for example, and then you want to sell more of your shawarma. Now, instead of saying buy one shawarma for 15,000 naira, you can bundle it up and say buy 3 shawarmas for 20,000 naira. Now, what do you do in a situation like that? You're not buying your raw materials small. you buy your raw materials in bulk. Good. So that buying in bulk helps you lower your costs by the time you do the calculations. And then instead of buying this big tortilla wrap they use, you can buy smaller pieces. So you buy smaller pieces, it helps you produce more at a lower cost. So when one person is selling a very big shawarma for 15,000 naira, of which sometimes people cannot finish the shawarma at once, they'll share it and keep and eat later and stuff like that. You can sell 3 and just put a little bit of a markup, say 20,000 naira. Now you are selling 3, not as big as the one of 15,000 naira, it's smaller, but at that point, you are giving them more value. More value. Also, you can say free delivery, but it doesn't mean that you are paying delivery from your own expense. You can offer free delivery. Oh, you are selling your shoe. Your total cost of selling your shoe is 10,000 naira. And then how much is delivery? You have to do your homework to know the areas you deliver to and know what the delivery fees are. And then you include your delivery fee into your shoe price. Instead of selling your shoe for 15,000 naira, you get to sell your shoe for 20,000 naira and you tell them free delivery. So understanding your target audience, understanding how their mind works, understanding what they hope to receive and the value they perceive, all these help us in actually knowing how to set our prices, where at the end of the day, it doesn't seem like we're working tirelessly and not making profits or even growing the business. So all these things come together to actually know your strategies. Strategy is very important in setting your prices. So we proceed and then say if you're actually ready to fix this, we have a book called Setting Prices. Setting Prices was born out of constant cries, worries of clients and customers saying, this is their challenge, this is their challenge. And we've been happy saying, oh, we're even happy, we're glad you know it is a challenge and you want to fix it. Here is how to fix it. So we wrote Setting Prices, made it extremely affordable so that business owners can actually fix these problems from the beginning of their business. If you've made a mistake and you're already halfway in your business, it's still not too late to fix it. So all these things I've mentioned and more with actual breakdown of calculations, walkthrough, and setting prices, it goes for 6,000 naira. Now, here's what we want to do. If you purchase Setting Prices within the next 48 hours, it means you purchase it, you sit down, you go through it, you go through your numbers step by step, you list out everything the book has told you to do, and then you now say, I've gone through this. We'll open a Q&A live session next week. Once you purchase the book, we'll open a Q&A session to sit down and walk through your pricing strategy. Is it good to go? Do we need to sit down and review it? All your pricing questions, all the fears you exercise is going to be a closed meeting session for only those that have purchased the book and want clarity. So we'll be available, we'll sit with you, we'll break it down step by step to ensure that your pricing is good. And next time you'll be able to set your prices because you already have your formula down on how you can know your price needs to be changed, how you are changing your price, how you are modifying things, how you are informing people, how to not even lose these people you already have because they are happy being with you based on the perceived value they are giving. So that's it about setting prices. And I encourage us to purchase this book because it will actually take your pricing game to the next level. If we have any questions at this point, we can also chip it in. Please signify, raise up your hands, drop your questions in the chat box, and we'll respond because we've actually come to the end of this webinar. We'll just give it a few minutes and then we'll wrap up. Okay, so we'll wrap up by just watching, being on this slide. You can actually use your phone to scan this barcode and it will take you directly to the business affairs portal. We say pricing is one piece. Running a structured and compliant business is the key to growth. Your pricing is one part, but are the other arms of your business actually working in order for you to stay sustainable and compliant? Because the end goal is your business actually scaling, growing, and staying sustainable. It's not good enough that we start business today and some of the things that could have been avoided or some of the things that could be better based on getting the right guidance, we didn't get it, and then we end up closing the business. So what we do in business affairs is to ensure your business is running smoothly, your business is structured, your business is compliant. It's a platform that encompasses your business structure, your entity management. For those of us that may not have registered businesses, we start from the pre-incorporation stage, actually making your entity legal in the face of the society, in the face of the government, right? We incorporate your business, we structure your business, we help you manage your numbers, because that's where we have key problems in businesses, just running and flying blindly. All these we offer in business affairs, and then you can just scan the QR code to sign up on business affairs. Signing up is free, and then we'll take it up from there. So I want to thank you all so much for joining this session. We'll have key resource links in the chat box, the link you can use to purchase certain prizes, and other resourceful links that will be dropping in the chat box for your for you to take action. Thank you so much, and I'll hand over to Habeebat.
Well, thank you so much, Madam Zulfah, for such an exciting session. And thank you to everyone that has joined us today. We hope today's webinar has given you practical strategies to help you price your products and services more confidently and profitably. I'm sure many of us are living with a much clearer understanding on how to price without relying on guesswork. And as business affairs, we are committed to helping entrepreneurs run compliant businesses. If you find today's session valuable, please stay connected with us by following business affairs on social media platform and our WhatsApp compliance community. Follow us on Instagram, connect with us on LinkedIn. The links are in the chat box. Kindly grab the links before the end of the session. And on behalf of everyone at Business Affairs, thank you once again for spending your time with us today. We wish you a continued success in your business journey. Have a wonderful day. Thank you.